So, hi everyone. Wanted to take a moment to answer some more of your questions you've submitted over the last couple of days with taking a look at credit reports and credit scores. So I took some of the information from the form that you submitted and wanted to see if we can address some of your questions tonight. So first, Justin asked, can your credit score be different depending on the credit bureau? We did say that there are three credit bureaus in the United States. You have Experian, Equifax, and TransUnion. And the short answer to this question is yes. Your credit bureau, your credit score can actually differ depending on the credit bureau that reported it. Why? Because all three of them kind of have slightly different algorithms that they work with. While the general breakdown of the percentages that we gave you were about the same, they all have slightly different rubrics. So it's possible that if you took your credit report from a couple of different bureaus, that they could be slightly different. Probably you're not talking that one is going to have you at 550, the other one's going to have you at 800, but you may be talking a couple of points, 10, 20 points here or there, depending on the credit bureau. They also work with maybe slightly different information. Maybe one credit bureau knows about an account that the other one doesn't know about. So those can all affect your credit score. So yes, your credit score can be different depending on the bureau. Alexa and Macarena asked two questions that are really connected. So Alexa asked, can checking your credit score really make it go down? And Macarena asked, how many points does an inquiry take off your credit report? There's a bit of a myth out there that says, we said that about 10% of your credit score is made up of inquiries, like who has looked into your credit. So some people believe that you could actually lose points on your credit score for checking your own credit score. A little bit of a catch-22 there. The answer here is not really. I was doing a little bit of reading about this and I found that in reality the credit bureaus look at this in two different ways. They call hard inquiries and soft inquiries. Hard inquiries really have to do with loans and credit applications, quite honestly. Car loans, mortgages, new credit cards, that type of deal. Those are hard credit inquiries and those can have an effect on your credit score. The other ones they call soft inquiries are really more of like job background searches and your own credit inquiries. Those types of inquiries are considered soft searches and they don't really impact your score at all. So it is totally okay for you to look at your credit score and to be aware of it and monitor it. Totally all right. So to answer Margarena's question, how many points does an inquiry take off your credit report? I did some reading and they said on average it could be anywhere between 5 and 15 points if you, let's say, were to have a loan looked into or a mortgage or something like that. So quite honestly, it's a negligible hit and then probably within a month or two those points are going to probably come back, assuming that you're doing everything else okay. So every once in a while someone does have to look into your credit, but it's okay. Things kind of iron themselves out in the end. So two really good questions. Nicole asked a really awesome question that is very, very topical for what's going on in our world today. She asked, what happens if you owe money to a lender but then unexpectedly get laid off? Lots of people are in this boat right now. How many tens of millions of people in the last month and a half have filed for unemployment, right? So the answer to this is you will probably still owe the money because you did borrow it, but there are things you can do. Number one, and the biggest suggestion I have for you is if at any point you find yourself unable to pay back your loans, first, you have to contact your lender. Call the credit card company, call the bank, call the mortgage company, wherever you borrowed your money from, call them, explain the situation, that you were unexpectedly let go. You find yourself unemployed, right? They will work with you. I know in today's condition, just in 2020, the government has programs in place and laws in place and executive orders in place that have ordered lenders to either suspend loan payments or to definitely like hit pause on loan payments. So it's possible that if you're going to be unemployed for a couple of months, that you could go to your car loan company and say, I have no income. I would pay you, but I have no income to pay you. And they might be able to, you know what, we're going to pause, payments for the next couple of months and we'll just take those payments and tack them onto the end of your loan without interest or whatever. So I would definitely call the lender. and see what they can do for you and work with you on that. Okay. The debt doesn't go away. You still owe it, but they're willing to work with you. They're willing to work with you, quite honestly, because getting some of your money is better than getting none of your money. So if it means that you have to pay them back in longer amounts of time, or you need to take your 5-year loan and make it a 7-year loan, generally the lenders will work with you. Okay. Emma asks, are there ways to view your credit score more than once annually for free? Just want to clarify here, Emma's asking about your credit score. We said that your credit report you can view once a year for free at some of the different credit bureaus and freecreditreport.com and some of those places. Your credit score you can check very regularly. If I wasn't using my phone to record this, I would show you that on my Capital One app, I can go in there and open up and look at my credit score whenever I want, and it really kind of updates itself month to month, and they even show me things on my credit score that may have caused the score to go up or down. So the credit score you can totally look at more than once a year. It's really your credit report that happens. Christina asks, can you get a loan with no credit? Great question, especially for you guys who are starting out your life. I'll say it this way, there's a difference between someone with no credit and someone with bad credit, right? Bad credit, if your credit score is in the 500s or lower, you have proven over time that you can't handle borrowing money, right? But for someone who's just turned 21 or I just turned 18 and I'm looking to borrow some money to buy a car or whatever, that's different, right? So it's not that you have bad history, it's that you have no history. Can you get a loan? I'll put a caveat on all this to say it depends on how much you're asking for. So that could be one effect, right? If you have no credit history and you're looking to take out an $850,000 mortgage, you could be declined because you have no history of borrowing money and paying it back. Let's assume that you're not going crazy and you're looking to take out some money, maybe to buy a used car. I'm going to borrow $10,000, right? $8,000, something like that. Can you get the loan? Probably. I'll probably bet you're not going to get the lowest interest rate. They may put you somewhere in the middle, or they have an interest rate specifically for brand new borrowers. So it is possible to get the loan. You may not get the most favorable loans until you can develop this history of being able to pay, but you can. I don't know if I mentioned it, but there are credit cards you can sign up for, they're meant to be entry-level credit cards. So I need to get my foot in the door somewhere. The way I would describe it in class to you is it would be like a bit of a chicken and the egg problem. In order to get credit, you need to have a good borrowing history, and then we'll lend you money. But if I have no borrowing history, how do I get credit? Well, you have to, how do I build my credit? Well, you have to go get credit and pay. Well, so it's possible. It's just that they have the cards that will allow you to get in. You need to get a foot in the door somewhere. So maybe they'll start you with a very low credit limit. It could be $500. $500 credit limit and not a wonderful interest rate, at a medium to high interest rate, but over time, as you use the credit card and be able to pay down the balance and use it and pay it and use it and pay it, now you start to build your credit, they'll call it. So then you could work your way up to a larger credit limit or a lower interest rate, but it's going to take some time and using the card. So can you get a loan with no credit? Sure. It's probably not going to be the best loan you can get. The interest rates are not going to be great, but it's somewhere to start. Awesome. Kelly asks, how long does it take to repair a poor credit score? Well, the short answer is it could take upwards of 7 years to repair your credit score or your credit report, because the information in your credit report only stays there for 7 years, right? So it could take that much time to let the mistakes you made kind of filter their way out of the system. Your credit score can rebound, though, even if you start to make payments the month before. The month after. Let's say you miss a whole bunch of payments and your credit score takes a hit. Well, if you now start getting back on the boat, get back on the bicycle, and you can now start, you know what, I'm going to make my payments. I'm not going to charge millions of dollars on my credit card. I'm going to keep my balances low. And if you can do that for month after month after month, your credit score will slowly start to rebound. All right. Sometimes you have to just wait out the clock. Right? You just have to wait for some of the bad information to kind of work its way off your credit report. But the best way to get back on the bike is to be able to make a decision that I'm going to not spend as much on my credit card. I'm going to make my payments on time. If you remember, when we looked at that pie chart, I don't have it here in front of me, but when we looked at that pie chart where we said, what is the distribution of your credit score? 65% of your credit score is based on the amount of money you owe and your history of paying, right? 65% of your credit score. So the best way to repair your credit score is going to be to start making a decision to pay your bills, keep your balance low, and get in the habit of showing you can borrow money and pay it back. Nick asks, if my credit score is bad and I increase it over time, will there still be negative effects? Probably not, at least with your credit score. I don't think that if a lender looks at your credit score that they're going to now see the history of your credit score. Right, so if something happened but I've been working to increase it, great. The credit report, the bad information might stay in your credit report, but we just said it will only stay there for 7 years. So in some ways you can make a mistake when you're 21 and then just wait it out, and eventually it comes off your credit report. Justin asked, does my income impact my credit score? Really awesome question. I actually had to look this up. Apparently the answer is not really. If you looked at the pie chart where we talked about what goes into your credit score, the amount that you owe, your history of paying, the types of credit, the length of your credit, and the increase into your credit report, none of that involves your income. So the credit score itself is not dependent on your income. Again, that really is just a reflection of your ability to pay back loans, right? How much are you borrowing and how well are you doing paying them back? I did read, however, that sometimes your income could affect your ability to borrow in general. So the credit score is one part of it, but if I'm going to borrow a loan, if I'm going to borrow $750,000 to buy a house, yes, I care about your past record of borrowing, but I also care about your ability to pay, right? They call it in the industry, they call it capacity. How much income do you make? Could you afford, if we do the calculations, it's going to cost you $4,000 a month for your mortgage. Can you afford that? Do you have the income to handle that? Right? And the bank wants to know that too, right? So does it impact your credit score? Nope. Can it impact your ability to borrow? Yes. The credit history, the credit score, and your income could have an effect on whether or not you can get a loan. Josh asks, how to keep a good credit score without wanting to mainly use a credit card? All right. Well, how do you build a credit score without having a credit card? That gets a lot harder because that's an easy, regular way that you can borrow money and pay it off. After that, you're talking about other types of loans, right? So you're talking about student loans, you're talking about car loans and mortgages and other personal loans, right? Those are the other forms of debt you can take on to prove that you can borrow. So it's not easy. And it's quite honestly, some of those other things involve lots of money, right? You're talking tens of thousands of dollars on an auto loan, or you're talking hundreds of thousands of dollars on a mortgage. So that's a lot harder to start demonstrating your credit worthiness. But it's possible, I suppose. But quite honestly, my suggestion to all you guys is to, when you're old enough, to get yourself a credit card. Get a credit card and start there. And start using it. But start using it with the idea in your mind that you are going to pay off this bill at the end of the month. Every single month. Get in the habit of bringing up a balance and paying it off. Back down to zero. Put on a balance, back down to zero. Right? Use one card, use it responsibly, and that'll slowly start to build your credit. And that way, when you do, maybe a year or two into you working, you then would be looking to take out a car loan or a personal loan for something, right? So it's hard to do it without a credit card, but it's possible, but it really involves other loans, which are going to be probably a little bit more complicated. Glenn asks, what happens if you don't pay the money back? Okay. Well, we've already kind of addressed this in previous videos. So if you follow the train of thought here, right, you don't pay back your credit card. You don't pay months on end. We know that when you don't pay your card couple of months in a row or miss payments, you get put on the default rate. So step number one is that your interest rate goes up. Okay. All right. Now, if you still don't pay, and now you're continuing to miss payments, the second bad thing that's going to happen is your credit score is going to start to go down, because now either your balance continues to climb, or the number of payments you keep making continues to drop, or the amount of time you're 60 days late, you're 90 days late, you're 120 days late, 180 days late on your credit card. All of a sudden now your credit score starts to tank. Okay. All right. You're on the default rate, and all of a sudden now you still have not paid, and now your credit card company basically close your account. They cancel your card, which will be reflected on your credit report, that this card was canceled not by the borrower, but by the lender. So that will show up on the credit report to say that the credit card company shut down your credit card. And when they shut down your credit card, they still want their money, so they're not just going to let you walk away. They're going to take your credit card bill and they're going to send it to, I think we discussed this, we called it a collections agency. A collections agency, their job is to go find bad debt. Capital One doesn't want to chase you down. They don't have the people, they don't have the interest to chase you down, but a collections agency does. This is what they do. So we will take the bill, give it to the collections agency, and they'll come after you. And they're going to be a little bit more aggressive than Capital One. They're going to start by sending you things in the mail, and then eventually they're going to want to come find you and get the money. If that doesn't work, then either the collections agency or the original company could possibly take you to court and sue you. And then if you win the case or lose the case, especially if you lose the case, the judge could legally order you to pay, or in some cases, in the extreme cases, the court could actually seize property. Right? So if you're not going to pay your credit card bill, we're going to repossess your car, and we're going to take it and sell it and take the money and use it to pay off the debt you owe. So that's what happens if you don't pay the money back. But we're not going to worry about that, because you are going to pay your credit card bills, right? Jason asked, do you have to show your credit for any big-time purchases? The answer to this is only if you intend on borrowing money. The cheapest and easiest way to buy anything, friends, is in cash. If you have the cash and you can do it in cash or check, you don't ever pay interest on anything, you're never borrowing money from anyone, no one ever has to ask about your credit worthiness because you're never borrowing money. So the easiest way to buy things, or the cheapest way to buy things, is always in cash. You only have to show your credit history or your credit score or your credit report if you are going to buy big things by borrowing, either by a credit card or by a loan. Kevin asks, how do I correct any incorrect information on my credit report? Well, the easiest way to do that is to contact the credit bureau. Contact any one of the credit bureaus. You probably want to contact all three, quite honestly: Experian, TransUnion, and Equifax. You're going to contact them. If you look at your credit report and you see maybe a line of credit that's on your account that you have no idea how it got there. I don't have a Discover card. Why is there a Discover card on my credit report? I don't have a cell phone bill through Verizon. Why is there a delinquent Verizon bill on my credit report? That could be a sign of identity theft or credit fraud, so that's something else we have to take care of. But you can basically dispute a claim, or you can dispute a line item on your credit report. I don't know anything about this Verizon bill, and you dispute it. There's a way to do it online. You can file a little report explaining your reasoning for why, and they'll look into it. And if they find that it is, in fact, a delinquent account or a delinquent whatever, if it's a fraudulent charge, the credit bureau can actually take that off of your credit history and your credit report, and it goes away. So the answer here is to contact one of the credit bureaus or all the credit bureaus and make sure that you dispute it, and that they're able to take that off of your credit report. So those are the questions we have for today. You guys asked some fantastic questions, and we're going to maybe do this one more time before we leave the credit chapter, and definitely if I can get financial aid in here. So keep those questions coming, and we'll see you next time when we answer more of your questions.